Hello, and welcome back to Explain the Charts, your channel for in-depth technical and fundamental analysis. Today is November 24th, 2025, and we are taking a close look at Meta Platforms, symbol Meta. The stock has been under immense pressure recently, and there's a whirlwind of news creating significant volatility. First, let's break down the current events shaping the narrative around Meta. The primary bearish sentiment stems from the company's massive spending on artificial intelligence. Meta has guided its 2025 capital expenditures to a staggering $70 to $72 billion, with warnings of even higher spending in 2026. This has spooked investors, who are questioning the path to monetizing these huge investments, especially when competitors like Microsoft and Alphabet can leverage their cloud businesses. The stock has dropped about 18% in the last month alone, reflecting these concerns about shrinking free cash flow and margin pressure. Adding to the uncertainty, Meta's chief revenue officer is departing, signaling a major shakeup within the company's leadership. On the legal front, it's a mixed bag for Meta. They recently secured a significant victory against the FTC in an antitrust case, which is a major long-term positive. However, a Madrid court just ordered Meta to pay nearly €500 million to Spanish news outlets for GDPR violations, highlighting ongoing regulatory risks in Europe. Despite these headwinds, there are strong bullish arguments to consider. The company's core ad business is performing exceptionally well, with revenue growing over 20% year-over-year and the price per ad increasing by 10%. This growth is fueled by the very AI that is costing so much to develop. It's increasing user engagement on Facebook, Reels, and Threads significantly. The recent pop-and drop after NVIDIA's blowout earnings report shows just how sensitive the stock is to the broader AI narrative. So, we have a classic battleground scenario: incredible growth and engagement versus massive costs and uncertain future profitability. Now, let's see how this narrative plays out on the charts. Looking at the full daily chart for Meta, we can see the story of 2025 very clearly. The stock had a powerful uptrend for most of the year, peaking at an all-time high of $796.25 back in mid-August. Since that peak, the trend has decisively reversed. The selling pressure began to accelerate through September and October, culminating in a catastrophic drop following their late October earnings report. Let's zoom in on that period to see the damage more clearly. Here in this focused view, you can see the massive bearish engulfing candle on October 30th, where the price gapped down from around $750 to open below $670. That single day completely shattered the bullish market structure. Since then, the price has been in a steep and orderly downtrend, breaking below all major moving averages. As one news report highlighted, the stock has now entered a structurally bearish phase. We can see the price has been attempting to find a floor for the past couple of weeks. The critical battleground right now is this zone between $595 and $600, which has been tested multiple times. Last week, on November 18th and 19th, sellers pushed the price down to lows near the $581 to $583 area, which is now our most immediate and critical support level to watch. The stock closed Friday at $594.25, right in the middle of this contested zone. The volume on these down days has been significant, indicating strong selling pressure and conviction from the bears. Let's switch to the 1-hour chart to analyze this recent consolidation and volatility with more precision. Here we can see the intraday price swings over the last few trading days. Notice the sharp rejection on November 20th, where the price popped towards $606 before being slammed back down, likely tied to the market digesting NVIDIA's earnings news. This created a short-term resistance level. We can also see multiple tests of the low $580s, where buyers have stepped in each time to prevent a further breakdown. This price action is forming a potential consolidation range, roughly between $582 and $605. A decisive break of this range will likely dictate the next short-term move. For an even closer look, the 15-minute chart from last Friday shows a choppy, sideways market. Price action was tight, fluctuating between roughly $587 and $598 for most of the day. There was no clear conviction from either bulls or bears heading into the weekend, which suggests the market is waiting for a new catalyst. This indecision perfectly reflects the conflicting fundamental news we discussed earlier. Okay, let's pull back to the daily chart to summarize and talk about potential scenarios. The key price levels to watch are crystal clear. Critical support sits at the recent lows around $581 to $583. If that level breaks, the bearish case is strongly reinforced, and we could see a move down towards the next price zones mentioned in analyst reports, around $575 and then potentially $555. On the upside, immediate resistance is the $605 to $615 area. A break above $615 would be the first sign of a potential short-term reversal, with the next target being around $635. However, a true trend reversal would require a much larger move back above the $670 to $690 zone, which is a massive hurdle. So, what are the likely scenarios? Given the strong bearish momentum and the negative sentiment around spending, the path of least resistance appears to be lower. I would assign a 60% probability to a scenario where we see a break of the $581 support and a test of lower levels in the coming weeks. This would be reinforced by any negative market news or further analyst downgrades. Alternatively, the stock is in deeply oversold territory, which could trigger a relief rally. The bullish case, which I'd place at a 40% probability, involves the stock holding the $581 support and building a base here. If it can reclaim and hold above $605, a squeeze towards $635 is certainly possible. Look for positive news regarding AI monetization or a broader tech market rally to support this scenario. Things to watch for are any official company statements on their spending strategy and upcoming preliminary Q4 guidance. Thank you for watching this detailed breakdown of Meta stock on Explain the Charts. Remember to like and subscribe for more content. Finally, a quick disclaimer. This video is for informational and educational purposes only and does not constitute financial advice. You should always conduct your own research and consult with a professional before making any investment decisions.